this video in this video you are going to learn how I take my trade in the simplest form possible. You're going to learn how you have check boxes. Just need three things to check for, and then another set of three sub things to check for to get your trade. Trading doesn't have to be very difficult or complex. Okay, so in this video you are going to learn how exactly the blueprint I use to take my trades. No more, no less. Although every knowledge you acquire in trading is not wasted, because those are the things that help strengthen your psychology to be able to hold trades for long. Okay, but I'm going to show you exactly what I do to take trades. Now this is a silver chart, 1 hour chart. Now yesterday morning I saw this setup. Although I did not take it, I just wanted to study how it looks, but it was exactly my trade. Exactly everything was complete. But there's a reason. I'm going to show you why I did not take the trade. Now look at it. When I want to take trades, the first thing I want to see a breaker block. I'm going to take some time to explain what I regard as breaker blocks. Now let me show you this. Can you see this point? This black red candle before this impulsive green candle. This was meant to be an order block, because after this red candle there was large buying. Are you seeing it now? Now what happened? Price went up. When price came here, it did as if it was going to respect it, but did not respect it, and then dropped, disrespected it, and went below it. Now I'm going to mark that price came and it came below it. It came below it. It came below it. Please do well to subscribe and like this channel. I'm going to be showing you exactly how I trade every day. My target is just to make sure that you gain mastery. Master one system. Okay, one system of trading. I'm not asking you for anything, just subscribe, turn on notifications, because almost every morning I'll be coming here to explain something to you, and it's the same thing I'll be explaining so you can gain mastery. Okay, now my device is hanging. Okay, so this was meant to hold price when price comes back. Now look at what happened. The market disrespected it. Now immediately the market disrespects this order block now turns to a breaker block. Are you seeing it now? So a breaker block is a disrespected order block. Maybe I should write that. Let me look for a way of writing that down. So a breaker block, breaker block, breaker, okay. A breaker block is a disrespected order block. So a breaker block is a disrespected order block. Okay. So now when price has disrespected an order block, if you look at one of my videos, I explained all breaker block in depth. I used Gary and other things to explain it. Go and watch it. So when price disrespects a breaker block, price usually comes back. Whenever price comes back to it, you usually respect it to go down. It's not even using it yet. You usually respect it and pushes down. Are you seeing it now? So I don't want to go in depth here. Check one of my videos. I used one of the videos. The title is I used Gary to explain other blocks and breaker blocks. Check the video and check other videos because I use other blocks a lot. Now, I told you that I look for three things whenever I want to take my trade. What are the three things? I want to see price. I want to see something that looks like an order block. So what do I mean? I want to see price go up, sweep a high, then come down and break through it. Because I am the opinion, I am of the opinion that when institutional players want to sell, they will buy first. They will drive the market. If they want to come down, they will drive the market up first, gather their positions above, and drop it down. So let's say they want to sell. If institutional players want to sell, they will not just sell direct. If this is where they are, if they want to sell, they are here. If they want to sell, they will, this is accumulation, they will accumulate, they will drive the market up to get a more favorable price. Sometimes then they will now accumulate more position because you can see they spent a lot of money pushing price up like this. So they have to accumulate positions, then sell from an order block. Another block is where they stopped accumulating, they pushed that sell where there was large order, whether a buy order or sell order. So they will drive price up, then from an order block now drive it down. If you understand this, then you'll not be taking useless trades again. Are you seeing it now? They will drive it down. And when the institutional players are driving price down, something happens. There's quick displacement. The push is impulsive. And what will you see in impulsive moves? You will see fair value gaps, most likely. Are you seeing it now? So in one of my videos, I explained to us that you see all these institutional reference points are like symptoms. If someone has malaria, the symptoms alone will not be vomiting, a kind of. You can even find vomiting in other sicknesses. You find fever, you find running of temperature. Are you seeing it now? You may find headache in it. Are you seeing it now? You find shivering in it. Those are symptoms. So when these institutional players whenever they want to do anything, they go the opposite direction first to get favorable prices. If you can understand this, it will help you a lot. So I want to see price drive above sweep liquidity, then come back below it. This push, this their real push, is sponsored by an order block. So what you are seeing is seemingly breaker block. Are you seeing it now? Order block and break of structure. So this is my blueprint. On my 1 hour time frame, so I'm going to give you my blueprint, everything complete. On my 1 hour time frame, 1 hour, I want to see, oh sorry, let me write this properly. I'm taking my time to do this video so that if you have not been clear or you don't know what to do, then this is it. This is the video for you. Watch it, watch it, watch it, watch it. Okay, so these are the things I want to see on 1 hour time frame. I want to see 1 hour breaker block. Number 2, I want to see one 1 hour order block. I want to see 1 hour break of structure, BOS. BOS means break of structure. So I want to see 1 hour BB, that is breaker block. I want to see 1 hour order block. I want to see 1 hour break of structure. Now this particular place I am now, I took that trade. I took that trade on one of the video self, the analysis and everything of the video is on this page. You see silver trade hit tip. I took that trade. It was earlier this week. Okay, so I want to see that. I want to see 1 hour breaker block, 1 hour order block, 1 hour break of structure, and preferably mark it so that you not make mistake. Mark it. What you will need to mark is, for this breaker block, mark the point where liquidity was swept. So I'll mark this point. Liquidity. Are you seeing it now? Let me align it well so that you see it properly. So I want to see what liquidity did. Are you seeing it now? Fortunately, I be unfortunately, look, okay, this is it. Then this is the break of structure on 1 hour time frame. No, not this. Break of structure on the 1 hour time frame. I want to see that too. Are you seeing it now? Then once I've been able to see this, eh? Now this is what I did. I'm using this last trade I took as a clear example. This is where the large impulse buying started. So this was what I marked as my order block on that day. Or usually I prefer my order block to be tipped. A kind of, you can see these three candles, 1, 2, 3. The order block usually should be this candle. Right? In the candle that the highest point of that candle should sweep the candle before it, should sweep the high of the candle before it. That is good as an order block, preferably at all times. Hmm? So, like in the midst of this one, if you want to pick this now, this is what you should take. But you can also take it as supply zone. Like this one now is the last candle before market started moving down. You can even take this. Are you seeing it now? Provided you are going to use confirmation entry, or sometimes you go to a lower time frame to refine to get the actual point. When you're looking for the actual point, you look for the one that it is the middle candle. And what you are using as the other block is the highest point is higher than the, it sweeps the high of the other one. Are you seeing it now? Okay, so let me mark. Let's say I marked this, because honestly I think this is what I marked on Friday. Yes, I didn't take I marked this on Sunday afternoon. So on Sunday afternoon I marked that unextended bar. Are you seeing it now? So this is how it was. Are you seeing it? This is exactly how it was. By the time I woke up on Sunday, what did price do? Now, okay, good. Before I go further, so when you have gotten your 1 hour, you have specified, okay, this is my 1 hour breaker block. You have seen it. You have seen an order block that broke structure. When you've been able to write this out, you write a box in front of it and tick that, okay, I've seen this thing. Oh. Now you have to spend time to train your eyes to master seeing these things. Are you seeing it now? Now once you have been able to do that, I'm giving you blueprint. Don't search for anything again. Just if you don't have any already, don't search for anything. Just master, because the truth is I'm not even scared of giving all this stuff for free. Do you know why? Because you yourself, you are the strategy. Is succeeding in this stuff is not all about what I'm telling you. It is your personal development. But this is going to shorten your journey, okay? It's going to shorten your journey. And this is what is working, has been working for me consistently. Okay, so let's go to now. After I have done this, I'll go to a lower time frame, 15 minutes time frame. 15 minutes time frame. So this is the same thing I explain on this channel every day. What do I now want to see on the 15 minutes time frame? So you know that this is where I marked as where I want price to come to, right? This is where I marked as where I want price to come to for me to take my trade. On 15 minutes time frame, I can now refine it to something I feel should be the other block. Just as I told you the other time, I want to choose something. I still chose this one. Yes, this is what I still choose as my other block. And why am I choosing that? This particular red candle, it is the last candle before this impulsive move, and then you can see that the tip is higher than the candle before it, so that's why I chose it. You can see I'm not hiding anything from you people. I just want you to succeed in this thing, or at least shorten your journey. Okay, I just want you to shorten your journey. Now this is how I trade every day. This is how I've been trading. Yeah, I'm not showing you something I just learned. Many of these things is from back testing. I used to back tested, and then learned one or two from somewhere, back tested, and I arrived at this for myself. Okay, if you look at my videos, right, if you go down and look at my video, you see the improvement, small before I got here. Are you seeing it now? I'm using this channel to track, to document my journey, and if you look through, you will see it. Now, after I've done that, I came to 15 minutes time frame and I marked where I really feel should be where price is started pushing down from. That is the other block. I want to see that when price was retracing, because price has to come back there. That when price, as price left it, when price started coming back there, I want to see a fake shift in market structure. Let me explain to you. So price came down, right? Then it now went sideways. It now went sideways. I want to see that now it has started going towards it, right? I want to see that when price started now going towards it, I want to see that when it got somewhere, it gave a fake market structure shift. So some people now say, this thing no reach here, or it did not get here. It's now retracing, it's going without me. Then they will now rush in. Are you seeing it now? They will now rush in. Then I was expecting price to come and then tap and take them out and drop. So I want to see that happen. See another one here. It happened here again. It started doing as if it's coming back. Some people will now rush in. That is not all. While doing this, I don't just regard anything, because you can see that there was market structure shift. There was market structure shift kind of here. So now, while price is retracing, you cannot come and regard this fake market structure shift as part of it. Are you seeing it now? Now this fake market structure shift is what I call inducement, to induce early sellers. Are you seeing it now? So it's not part of this particular one, is not part of it. Why? This retracement has to be at least up to 50% of that range from where you are from. Let me show you. Let me not talk too much. Let me show you exactly what I mean. So you can use a fib tool to check for it. So you can measure it from here. Eh? it should be up to 50%. Are you seeing it now? That is half of the swing range. Let's say this is where you are intending to buy, or let's pick the high from where the other block was. From here to here, it should be up to half. The retracement should be, the inducement should be around at least half of it, or close to it, sometimes even close to it. So you cannot take this one as an inducement. It should be above or around 50% up. Are you seeing it now? If it is below it, it's not valid. It's not valid. It's not valid. Okay? So this is the same thing that we're explaining every day to you. The same thing. You don't need to buy that course again. Don't buy that course again. Just stay on this channel and then you get what you want to get. The sky is very, very wide for all of us. Okay, and please share, don't hide the channel, because some of you, when you see something that makes sense like this, you want to, please don't hide it. Okay. So this is where my inducement is. Okay, so I was now, you mark it that this is inducement, this particular place is inducement. If this one had not been printed, this is what I would have used as inducement, which is still valid because it's above 50%. Are you seeing it now? So I marked this first as inducement, and then I marked this down as inducement break of structure. Inducement break of structure. Inducement break of structure. I'm not hiding anything from you. I'm giving you everything. So please like all my videos. Big Konu. Like, subscribe, share. Okay, let's put it in the bottom, then center. Okay, are you seeing it now? So this inducement break of structure. Now with this, on a normal day, I can set my pending order here. With this, on a normal day, I can set my pending order here, put my stop here, and put this. Are you seeing it now? But I didn't do that day because it was, market had not opened, and you know market can gap up. It was Sunday. Market can gap up before coming down. So what did I do? I allowed the market. So market now gave me a confirmation entry. How? So when market got here, market did this, came down, did this. I was waiting patiently, came down, did this. When it now gave me a market structure shift, you can see that it has stopped going up. Once it broke that structure that pushed up, I knew that it was time for me to enter. Are you seeing it now? I marked this place. And this is the second type of entry. What is the second type of entry? Now this particular entry is the other entry I'm using inducement. If I'm not using inducement, market does not give me inducement. I've explained this before. Let me explain it again. I've explained it in one of my videos. Let's say market did not give this inducement and it kept going. It kept going. And then it got here without giving inducement. Then I can't enter. I'll wait for market to shift structure. Take out this low that took it there. I'll wait for market to shift structure. Shift structure. Then give me another block. Are you seeing it now? It will have to give me another block. I'll wait for it to shift. Give me a market structure shift. If it is aggressive enough, I can enter somewhere around here, or when it gives me an order block, then I'll now come and enter. Please don't get, just concentrate on this one. Pick one entry. Are you seeing it now? But why I'm explaining this is because this is what I did here. So let me go again. So market came up, came down, and you remember what I told you, market wants to say it always buy first. It did the same thing. Are you seeing it? Went up, swept liquidity, came down. Are you seeing? Did this, another block there, and then push down, breaking structure, breaking this line, breaking structure, and shifting, changing its character from buy to sell. So let me mark that. Let me mark that. So this is the market structure shift. Market structure shift. Are you seeing it? That's the market structure shift. So immediately I saw this, I said, oh, very good, very, very good. And I came, you always find other block here. Look at the other block. And I came and I marked this guy. I marked this guy here. You can see that I'm not just taking that trade randomly. I've already, you can see all the work involved in. And I marked that guy there. This was what I did. I put my stop safely above here. Then I targeted this place. I'm supposed to target this external, but I targeted just inside here. This was the trade. Are you seeing it now? It took like, it played out the following day. By Monday morning it had hit, and Tuesday morning it had hit TP. This was how I took the trade. So what are the things again that I look out for? So recap: 1 hour breaker block, 1 hour order block, 1 hour break of structure, then 15 minutes. So this is my lower time frame confirmation now. Let me lower time frame confirmation. Lower time frame confirmation. What do? I look for 15 minutes. 15 minutes inducement. Remember, the inducement has to be at least 50%, halfway from that range where the other block that you want to enter from down. Are you seeing it now? Or from, you can pick it from the liquidity above that other block if the other block was not at the edge. So I want to see inducement, and then I want to see an inducement break of structure. The inducement has to break structure. If it's turned, it has to break structure so that people will be sure, the thing has turned or is going. And then 15 minutes inducement break of structure. I've given you this is everything I do. Inducement break of structure, inducement break of structure. Are you seeing it? And so this is just it. This is what I do. Once you see this, if you take it correctly, if you master this, you are good to go. Are you seeing it now? You are good to go. Once price has given you inducement, now if price does not give you inducement, then you have to use the confirmation entry. What is the confirmation entry? When price gets to where you wanted to enter, where you marked to enter, you need price to come up. Are you seeing it now? Yeah. Then shift structure downwards. If it directly goes up, shifts liquidity here, shifts structure down. If it directly does this, then it may not be able to get here because you can see the selling pressure is high. You just tap into a fair value gap and drop. Are you seeing it now? So if this was where you wanted to enter from, let me just explain that briefly. If this was where you wanted, if this was your order block and price did not give you inducement, I'm saying the other entry now. Are you seeing it now? Then you want price to get there, come down, go and sweep liquidity. Before market will sell, it will buy first. It will get liquidity. You want it to come, sweep liquidity above. Then if price pushes down very aggressively like this, then it may not get back up again. So it just come tap into a fair value gap around there, maybe paired with a breaker block. Fair value gap plus breaker block is usually very powerful too. You just tap into it and drop. Another scenario, I'm giving you everything, as in everything. That's what I'm giving you here. If price comes like this, gets to this place, let's say it sweeps liquidity, but could not come back to break this immediately. It did this, then came back up before doing this. Are you seeing it now? Before breaking this thing. Now you cannot use before doing this. At this point now, you cannot use fair value gap around here. Are you seeing it now? There will definitely be other block here. Are you seeing it now? So you come and use the other block here, around here, to enter. So this one now, your entry was around here. This one now, your entry was around here. There maybe at the top of the breaker block or something. So this would have been your entry here. Then for this one usually gives you a higher risk to reward. This would have been your entry. I just hope you are not getting confused. I'm just showing you everything. I'm giving you everything in this video. Are you seeing it now? So this is the second scenario. If market comes and the after sweeping liquidity, it could not, if market after sweeping liquidity, it could not come direct to break this low, then it comes here, then you have to enter like this. Are you seeing it now? Are you seeing it now? So these are two entries, and then with consistent backtesting, you get to understand and refine it to your taste. Are you seeing it now? So this is basically how I approach the market. This is basically how I approach the market. This is basically how I approach the market. If you don't understand this, rewatch. Now let me quickly show you the trade I didn't take yesterday. Let me show you the trade that I didn't take yesterday. Yesterday in the morning when I came, I saw the same thing on silver, but why I didn't take it is I saw these zones. I saw this place. There was an other block that was not mitigated, so I was scared that this place will now serve as liquidity. I saw another one, yeah. And once I see trades having zones like this, you may be used as liquidity. And if you study price, you see that after here it's going to just rain down. So let me show you that setup for yesterday. I just ignored it because I was not sure of it, so I left it. This is it. See what market did yesterday morning. As I woke up, I saw this sweep of liquidity here. Are you seeing it now? I saw a market swept liquidity here. So I'm regarding maybe this as breaker block. Are you seeing it now? But majorly why I'm just calling it breaker block is because it happens like that. This one did not complete. Is that sweep of liquidity that price now comes to go above. I think that's why I'm regarding it as a breaker block. So it may not close below it, just like this one. So I want to see it. You mark it. I want to see that sweep of liquidity. This place. I want to see market sweep a previous low, an old low. I want to see this. And why I was able to choose that, I was not scared that price will come here, because you can see this particular one that you see, a market already swept a previous low. So I was not expecting price. So this is protected. So now the market has swept this one. Now that means this should be protected too. Are you seeing it now? I saw this sweep of liquidity. That's our first. That is what do you call it? Breaker block. Let's just call it breaker block. I now saw what? Break of structure. Are you seeing it now? Break of structure, which is the second thing. This is 1 hour time, which is the second thing we are looking for. This is 1 hour time frame, sweep of liquidity or breaker block. I'm calling it breaker block. It's not breaker block. Are you seeing it now? But why I usually choose that breaker block is because many times it closes below it. Sweep of liquidity, break of structure, and then other block. In fact, why I did that is because there's a process of other block formation. There's a process. Long ago I learned the process of other block formation. Maybe I'll make a video on that. If you want me to make a video on that, put a comment there. There's a process in other block formation, and in that formation, price will drive down, consecutive down close candles, drive down before sweep liquidity, then drive up. That drive down is what I call breaker block. Are you seeing it now? Then sweep liquidity, then push up. Now on 1 hour time frame, I have my 1 hour breaker block in quotes, 1 hour break of structure, and then another block here. So that yesterday I marked this. In fact, I got something small from there. I just closed it. I took the trade and closed it. So I marked this last. That's not the candle I marked. This is the candle I marked. I marked as my other block. I marked this green because this one is at the tip. I marked this one because it looks more like what I regard as another block. I marked this that yesterday. I marked this. Then I now went to 15 minutes time frame to look for what my inducement and inducement break of structure. So I've not even marked my break of structure. It's very important to mark it. Let's go back to 1 hour time frame. So let me mark my break of structure. Are you seeing it now? So this is the break of structure. Break of structure. Break of structure. So for the three things for 1 hour time frame, I have it here. Are you seeing it now? Breaker, block, simile in quotes, other block, and break of structure. I have that. So I can now go to my 15 minutes time frame. 15 minutes time frame. 15 minutes time frame. Please open up, open up, open up, open up, open up. So we will now mark our what? Inducements. Moreover, once you go to your 15 minutes time frame, you go and look for the actual point. You refine your other block because it's from 15 minutes time frame we are entering. So what I did is I marked this red candle. Marked it. That last candle, I marked it on extended bar. Are you seeing it now? After doing that, I went to look for my inducement. What do I regard as inducement? I want to see price while coming back to that entry, just close to it, or at least 50% going close to it for it to shift structure. So I carefully checked and I saw that yes, market shifted structure here. I needed to be sure yesterday. So I zoomed out very well. This zoom out or zoom in. Then I now marked to see that it really gave me an inducement break of structure. Yes, this candle closed above it. I use candle closures, not just wicks. So this is inducement break of structure. I saw it. So I now came there. After seeing that break of structure, I said, okay, now I have an inducement. So I now marked this as inducement. Are you seeing? At least price should come and take out that inducement. Then I entered my long position. I usually don't come if I see that inducement, if it is very close to it, I just put it so I won't get missed entries. Are you seeing it now? And I placed it there. One of the things that also discouraged me, I didn't see where when price started. I think it was a little above, but you can see it. So I put my stop below this guy here because that's the protected low. Then you target above, but I didn't. Normally I wouldn't target this stop. I would target internal liquidity. Any high before that external high, I would target it. At least price will get there before doing any other thing stupid. And this is exactly what I would have gotten. I didn't take the trade. Okay. I didn't take the trade. Sometimes, I talked about opportunity cost yesterday. If you're not sure, you leave it. Are you seeing it? I did in those zones were not there yesterday. To have I did in this place because I was scared that, because you can see where it was. I was scared that maybe price would just deceive and come down to take. You see this particular break other block. I was scared that price would do that or this or use this. Are you seeing? So I was really skeptical, and those zones are still very, very valid. It's not that they have already been mitigated or swept. Are you seeing it now? So that's why I didn't take that trade. Okay, so I think this video is even getting too long. So please watch the video slowly, rewatch, share, subscribe. Okay, thank you very, very much. So if you have any question, anything you want me to break down, let me know. I'm willing to do that. So I remain Nelgrasam FX.